Day. The Dow Jones, one of the biggest indicators of how Wall Street is faring, broke the 14,000-point mark on Friday, happening for the first time in more than 5 years. And while more jobs were created, the unemployment rate ticked up from 7.8 to 7.9%. So what does it mean to my wallet and yours? Financial expert Gene Marks is here to help us understand it all. Thanks for coming in, Gene.
Hey, Joyce, good to see you.
Good to see you on a Super Bowl Sunday. Okay, so what are we average citizens to make of all this Dow Jones milestone stuff?
Well, first of all, it's a great thing, of course. The stock market is up at 14,000. That's the most it's been since before the Phillies won the World Series in 2008. So it's a milestone for most of us. But I have to tell you, Joyce, and I always tell this to clients as well, it doesn't necessarily mean, it's a good thing for the economy, that the economy is good and going well, or that it reflects the economy. I mean, what we're seeing here is, think about it, interest rates are so low right now. I mean, when you're putting money away in your savings account, you're getting like hardly nothing, right? So a lot of people are saying, if I'm not investing it in interest rates, I can't get return elsewhere, let's put it back in the market. And in my opinion, and a lot of other popular opinions are, that's what we're seeing. It's the money is going there because there's no really other place to go to invest your money to get a good return.
So is it helping our 401ks, or does it depend on whether you're invested in stocks?
Right. I mean, it really does. So if you have that 401k and you're kind of broken up with some in stocks and some in interest-bearing stuff, I mean, the ones that are in the stock market are doing better. But that doesn't mean that you should throw all your money into stocks, please. It really just depends on where you are in life and what your investment strategy is. And you always need to keep a good balance because you never want to put all your eggs in one basket.
Well, Gene, what does it mean to businesses like yours?
It's a very, very good thing, Joyce. I mean, the growing stock market is a psychological thing. It makes us feel better. It makes us feel like we're richer. So when customers of mine look at their bank accounts or their investment accounts and see that there's money there to be had, it kind of lets them open up their wallets a little bit more and spend a little bit more money. So for business owners, even both large and small, when they're looking to hire people, make investments, they're looking at their own wealth first. And when they see the stock market going up, it really does incentivize us to say, hey, things aren't going so bad. Maybe I will hire that extra person or buy that piece of equipment. It's a good thing for the economy.
Well, what about the job numbers, though? A mixed bag here. The president is happy that businesses made more hires than expected, but the unemployment rate went up just a tap. What does that mean?
Yep, it's a mathematical conversation, right? So what's happening is because the economy is getting a little bit better, more people are entering the job market. So when you have more people now looking for jobs and then suddenly you see who's unemployed, that means that that rate starts going up again. So it's a tick. It's good that we're adding jobs to the economy, but no one denies that we're just not adding enough jobs to the economy. The economy is really growing very slow. And Joyce, it was just announced last week that the economy actually contracted in the last quarter, which is really not a good sign for the future. But for now, again, the stock market keeps going up because why not put your money in stocks? There's no other better place to get a return right now.
All right, let's hope for the best. Gene Marks, thanks so much for coming in and joining us tonight.
Thanks, Joyce. Take care.
All right, kids at the Orchard Middle School, or Orchard Valley Middle